Look at that. I actually got 3 people coming in. Hey, what's up? Not much. I'm actually doing a YouTube thing now, but I wanted to get in touch with you. So what's going on? What? No, I'm going to be in about 2 seconds. I'm actually on YouTube. I got thousands of people listening to me talk to you. So what's up? Okay, do you have time? I can talk anytime tomorrow before 11:30 if you want. Okay, I'll call you like 9:30. Okay, cool, man. Everything all good? Okay, let's talk at 9:30. Cool, man. Okay. No problem, John. And you're welcome, Stefan, right? So what's going on? I need some questions. Although, before you do that, I know somebody asked about settlement. So I'm going to kind of do that. This down a little bit. Okay. So somebody had asked a question about settlement. So I didn't remember what their questions were, and I'm way too lazy. Okay. Okay. Hey, Damaris, it's awesome. I'm so happy. I think it's Damaris. I'm so happy that you passed it. I'm happy if you think I helped you. Now, if you're taking the 6 or the 7 top off, the 6 maybe not so bad, but the 7 is legit. You got to make sure that you own that stuff, okay? So if you're doing the 7 top off, make sure you absolutely own it. You got it. You got to make sure you own this stuff cold. Okay. And again, enjoy this. Damaris, enjoy the fact that you beat that SIE. Just get on that top off as quick as you can. Okay. So the 7 top off, remember, you have to respect it. It's a lot of suitability, a lot of options, and definitely a lot of cost basis and taxes. And one of my students the other day said a lot of preferred stock and equity, surprising amount. Okay. Okay. So Gabri, okay. So covered and uncovered. And John, you can ask your question. I'll take a look at it. Covered and uncovered have to do with when you're selling an option. If you have always remember, if you see covered or uncovered, the option is always a sale. Okay. So now, if it's uncovered, it's naked, which means you have unlimited risk or a big risk. So if you sell a call by itself without any stock position attached to it, it's uncovered and you have a lot of risk. So let's say you sell a 50 call at 5, you have unlimited risk because if the stock goes to 100, you have to go buy it at 100 and then sell it at 50 to the buyer of the call. But if you buy the stock ahead of time at say 50, then you don't really care how high it goes because then you'll sell them the stock at 50 that you already bought. So that's covered. Okay. So uncovered means there's no stock position attached to it and you have a lot of risk. Covered means that you added a stock position to your sale of a call or sale of a put, and that's protecting the option. So if you sell a call by itself, it's naked or uncovered. If you sell a call and buy stock, it's covered. If you sell a put by itself, it's uncovered. If you sell a put and you also short stock at the same time, it's a covered put. I hope that helps. Chili Willy, that's awesome. I'm so happy for you. So I'm hoping you're going on to the top off world and we have fun there. Now, John, all the following may be purchase on margin except. Okay. So now, in reality, you cannot buy options on margin. The problem is you can, if you sell options, you have to do it in a margin account, but you cannot buy options on margin. Happy to help. So if you buy a call or a put, you have to pay full price. You have to pay the full premium. So any munis can be bought on margin, exchange listed, NASDAQ. So NASDAQ listed and exchange listed are both pretty much exchanges. So they're both on, you can buy them on margin. Okay. Options cannot be purchased on margin because they are derivative. You must pay the full, full premium. So if you buy a 50 call at 3, you must pay $300. That's what it is. But you can do that in a cash or a margin account. Okay. A margin call is just when they ask you to come up with the money. So a margin call is when, so say you buy $10,000 worth of stock, you have to come up with $5,000. That's your margin call. The margin call, they're actually asking you to put money up. A maintenance call is when you get down to below 25% or 30% equity and you have to come up with more money. So a margin call is like the Reg T call when they ask you to put up money. A maintenance call is when you get down to 25 or 30%. There's no 2,500. It's 2,000. And it's not Reg T, it's FINRA. Reg T is 50%. Okay? There is no 2,500 Reg T. If there is, if you can show me, that'd be great. So now, FINRA puts a $2,000 minimum. FINRA puts a $2,000 minimum. Okay. Now, somebody asked me a question on settlement. I want to do that for a couple minutes. So, when you buy stock or buy ETFs or buy bonds, everything is T+2. Okay? If you buy anything it's T+2, which means you buy it on Monday, it settles on Wednesday. Jacob, that's awesome. I'm so happy for you. I hope you found it okay. If you want, leave some feedback. It's this way you can get off if you want. I don't be bored by this. If you can, leave some feedback on one of the videos. Tell them how you felt on it. Don't put questions. You don't want to get in trouble. Just give a feel for what you thought the test was like, how it was. And I'm happy to help, man. I'm just trying to give back a little bit. So again, if I buy stock or buy a bond other than Treasury, I buy it on Monday, it settles on Wednesday. Again, I buy it on Monday, settles on Wednesday. T+2. If I buy a Treasury or option, it settles T+1, which means it settles the next day. Okay? Now, when they do a dividend, there's 4 dates. DIRP, declaration, X, record, payable. The declaration is the day we announce the dividend. The record day is the day you must be an owner of record, which means you must have bought the stock and have settled by that day. So if the record day is Thursday, you must buy the stock by Tuesday so it settles on Thursday and you get the dividend. So let's do this. If the record date's Thursday and you buy it on Tuesday, it settles on Wednesday, Thursday, we're good. If you buy the stock on Wednesday, it settles on Friday. It's too late. So if you buy the stock on Wednesday and the record date's Thursday, you're settling the day after. The company has no idea who you are. They can't even send you a dividend. So it's trading without a dividend. That's ex-dividend day. And then they drop the price of the stock by the amount of the dividend on the X day. If you want to be crazy, and do a cash settlement where you settle the same day, it's called cash trade or cash settlement. Don't say cash account. That's just a non-margin account. Cash trade, cash settlement, and same-day settlement. You can buy as late as Thursday, and it settles at 2:30. Okay, Jacob, that's awesome. I love doing that. I was afraid I was doing it too fast, but I wanted to do it. I think Notman. Okay, so here's the thing, Gabby. That's really a top-off thing. And I can give you a little bit, but I'm not doing that because that's top-off, and that's where I make my money. So, again, Jacob, I appreciate it. I might do the Notman walkthrough, okay? I might do that one. I just have to see if I'll get in trouble. I'm not charging for it, so I don't think I will. They'll be annoyed at me, but whatever. I'm helping people. Okay, let me do John's, and I'll see what I can do on Gabby's, give you some information. Now, John, an investor has some stock held in street name and had just received proxy statements forwarded by the broker-dealer for an upcoming shareholder meeting. The investor wishes the shares to be voted as recommended by the issuer's management. Which of the following will the investor do? In reality, he doesn't have to do anything. If he doesn't return them, the issuer is gonna vote it their way. That's the way it is. That's a deep question on this, and that will not be on the SIE. Okay. Now, when it comes to option strategies, what long, short, stock calls and puts. Okay, so here's the thing. So I'm not going to go too crazy, but I will tell you a couple of things. Buy a call is the right to buy, which means you're bullish. Buy a put is a right to sell, which means you're bearish. Both of those, you're speculating, you're betting on the price going up or down. If you sell an option, if you sell a call, you're doing it for income. You're hoping it expires because you're receiving money. If you sell a call, you're bearish. If you sell a put, you're bullish. Okay? Now, if you're long stock, say you own 100 shares at 50. This is as deep as I'll go. If you own 100 shares at 50, you want it to go up. It's stock. What you're afraid is going to happen is that the stock will drop to like $15. So wouldn't it be really nice to have a thing that would let you sell the stock at 50 even if it went down to 0? So if I buy 100 shares at 50, I would buy a put. A put gives me the right to sell stock. So if I buy 100 shares at 50 and then I buy a 50 put at 2, even if the stock drops to 0, I get to still sell it at 50. Woo-woo, I only lose $2. If I sell a 45 put at 2, I bought it at 50, it goes to 0, I get to sell the stock at 45. I lose 5 plus the 2, I lose 7. Still better than losing the 50 points. So again, if I'm long stock, I would buy a put to protect. I would sell a call for income. Okay? Now, if I'm short stock, I'm bearish, so I'd either buy a call or sell a put. Write that down. If I'm long stock, I would either sell a call for income or buy a put for protection. Okay. If I'm short stock, I would buy a call to protect or sell a put for income. Okay. Now, what makes up the largest section of the test? Now, options is not the biggest part of the test. It's the biggest part of the top off. It's like 30% of the top off plus suitability. The SIE is going to be regulations, like customer accounts, FINRA rules, stuff like that, and risks. They're going to talk about the products, but if you can nail all the regs, if you use STC, it's chapter 2 and 14 through 19. I don't know how it's on the other ones. I'm going to look for them. And it's a lot of regs, and you got to know the risk, what reinvestment risk, what principal risk is, interest rate risk, which I do on one of my earlier videos. Okay. There's 2 types of exams. There's the SIE, which is the initial one, which is what I'm talking about here. That's the one you take. That's 75 questions plus the fake ones that you don't need to be registered for, and it's the preparation one. After you pass the SIE, you're going to take the next one, which is the actual registration. It's either a Series 6 top off or a 7 top off or the 57 or the 79, depending on what you're doing. If you're going to sell actual securities, okay, like a lot of securities, like stocks, bonds, and stuff like that, anything more than mutual funds and annuities, you will have to do the Series 7 top off. If you're just doing mutual funds and annuities, you are doing, you're going to do the Series 6 top off. If you're doing investment banking, you're going to do the Series 79 top off. If you are doing market making and trading, which is hard to do, you're going to do the 57 top off. So, and there's other levels like the 22 and stuff like that. So, Inahood, I think your name is. What are you referring to? So you had an interview. Okay. Here, John, look for me on LinkedIn. I think we're connected on LinkedIn. If you think, I think so. Look for me that way. That's a probably. Don't fail. Okay. So shoot me a message on LinkedIn. Okay. Again, Inahood, I don't know what you mean by with Thrivent. I don't know who they are. I haven't done any research on them. If you have, and you think they're good, that's great. Just remember, if you're doing a lot of cold calling, that's a tough job. But if it's a real job where they pay salary, that's awesome. Get your foot in the door. Just get a job, and then you can always work in a year or so somewhere else. Yes, Ro. STC right now is so far ahead of the game than the other programs. I'm not saying they're end all be all. You can absolutely pass with Kaplan. You can absolutely pass with Notman. You can absolutely pass with Past Perfect or trading consultants. Okay? So the whole thing is that's where. But SEC seems to be ahead of the game. Notman, now the other guy even mentioned, FINRA has a practice website with practice tests, which I've reviewed, so don't do my review until you've taken it. And Notman has one too. Notman's a good provider. And I like that they added their own downloadable exam, which will help. Okay. Molly. An investor concerned about rising prices is most likely to invest in. Okay. I don't work with Stefan. I don't work with any of them. Not yet. I don't want to do that. I figure this way I can give honest. Because let's say come October, Notman kicks STC's butt, then I'm happy to promote them. I don't really care. I'm trying to do what's best for you guys. And understand if you use one of the main programs, you're not going to get hurt. You're not. But if you do one of the ones that nobody's ever heard of, like maybe Solomon or Pass the Exam by Robert Walker, you can still pass, but you might have a tougher time. Okay. Okay, that's fine. I'll connect you. Okay, so now, and if I think I just got the notification. So now, boom. I think I just nailed it. Okay, so now, see, look how quick I am. Okay, so now, an investor concerned about rising prices would most likely invest in a fixed annuity as a guaranteed return to hedge against inflation. Boom, no. A fixed annuity is subject to inflation risk. The variable annuity as its equity exposure provides a hedge against inflation. That's a true statement. A variable annuity as the opportunity for tax-deferred growth will hedge against inflation. Okay, the thing about C is that technically have tax-deferred growth, but that's not what hedges against inflation. It's basically invest in equity. That's why it hedges against inflation. Okay. Now, yeah, that's it. Vago, pull that question back. Yeah, I'm kidding. It's all right. People get them wrong. That's why we're on here, right? Okay. And a fixed annuity as the opportunity for tax-deferred growth. Tax-deferred growth doesn't give you protection against inflation. The investing in stock. The best security to invest, hedge against inflation is equity. So my question is, I would say, an investor concerned about a rising prices, oh yeah, it was his inflation, it would be B. I think that's the answer. Does that help, Molly? I hope it does. I rambled a little bit. But the point is, if you're worried about inflation, you buy something with equity, whether it's the variable annuities, which are really usually bad, but you don't have a choice. Stocks, mutual funds, ETFs, closed-end funds, anything with equities, okay. In an underwriting where fixing a minimum dollar amount to be sold in order to move forward is usually a mini-max. So when you do an underwriting, sometimes there's best efforts and firm commitment. So firm commitment is where I'm the underwriter, I'm guaranteeing the sale. You're the issuer, you don't even care. Don't even care if I sell them or not because I'm buying them from you. On the best efforts, the issuer is at risk. So the issue, if I'm going to go public, say I'm going to go public with my tutoring company, and I get somebody to do oh my God, firm commitment, then I just sell the shares. I'm guaranteed. Okay. Now, if it's best efforts, it's on the risk that if you don't sell them, if I can't sell them, or the underwriter can't sell them, I'm on the hook. I get the shares back. So we have a thing called the all or none, which means I want to sell all the shares. This is going to be my last question, by the way, because my student just contacted me. So if it's all or none, that means I either sell the entire issue, or I get basically, or the shares all come back to me and I don't sell anything. A mini max is basically, listen, I want to sell $1 million, but if you get to 600 grand, I'm good to go and you can go forward. So again, all or none, I sell the whole $1 million, or I don't sell any. Or a mini max is, look, I want $1 million, but once you get to 600 grand, I'm good to go. I hope that helps, John. And I did accept it, so shoot me a message. Okay, I'm going to jump out. I'm going to try to do another one, I think, Wednesday night. I'll try to do this. I hope I helped everyone. All the people passed, I'm so happy for you. And look, if you think I helped, please tell people. The only way I can keep doing this is if it keeps, if I keep going on. Gabby, I don't go on all that much. I try to do once or twice a week because I have a lot of students I'm tutoring, and I can only do it at night, and sometimes I'm just balls out tired. Like tonight, I have one more student, but I'm going to teach him while I'm walking back toward the train. I'm going to try to do Wednesday and then maybe one Friday night, but it's probably going to be Monday. And I'm going to try to do a couple regular just videos like I did in the beginning, but this seems to be working pretty well. And I'll always try to send out a notification like that little 7-second video to let you guys know. Hey guys, good luck. Keep reading. Focus on the regs. Focus on the risks. And hopefully I'll see you guys Wednesday, or hopefully I'll get a message like these. The other guys hit me up saying that you passed. Have a great night, guys. Good night.